So there you have it. I really don't know what's going to happen from here, but I tend to think things still have to get a lot worse to flush everything through the system.
All right, let's talk about markets, since that's what everybody really comes here for. Looks like inflation is finally maybe getting a little pushback. Gas and oil is way down. Big win for Americans and obviously the administration. There clearly is an upper bound to how much people will pay for a gallon of gasoline. Consumption is actually going down, which is interesting. Humans pretty adaptable there. Jobs, and we've talked about this every month as we watch it, finally dipped under 11 million, as Sachs predicted. We're going to shed 300,000 or 400,000 jobs, it seems, every month, which should take this, 10, 11 million number over the next year down to maybe 5 or 6, which would still be an unbelievable number and still put us at very robust full employment, which has been a big question.
Also, there's a number of open job, the number of job recs. It went down by something like 500,000 in 1 month.
Yeah, and it's been going down 300,000 or 400,000. So it's kind of been pretty consistent, but there's clearly something going on here. The stock market, interestingly, we've started to see a little bump here. Even crypto, which the most speculative of all assets, I guess, Bitcoin bounced as well, hitting 22, 23 now. So what do you think, Chamath, about markets? You may have called the bottom here on the program a couple of months ago, and I started J trading 3 weeks ago based on our discussions here, thinking we're bouncing along the bottom. Is it a head fake right now?
It rallies to around 4,000. I was a little off.
What rallies to 4,000?
The S&P.
Yeah.
Probably gets to 4,200, 4,300. Look, it's always important from my perspective.
Trading at 41.50 today, just so people know.
Yeah, it's always important from my perspective to just take the other side and just intellectually debate with oneself why the other side could be right. So at this point right now, what people would say is, okay, the Fed's going to capitulate at the beginning part of 2023. We have a pretty clear forecast for all the rate increases that have to happen. Everybody's doing the work that's necessary, either raising prices, cutting costs, or doing both, letting people go, et cetera, et cetera. So maybe we're there. Okay, so what's the other side of that? Well, I think, again, as I've stated before, the other side starts with energy. And the reason why I think it's important is that it really is the conflation of an economic system and a political system using an instrument. And if you look inside of what's happening in Europe, there's a lot of complexities here that I think need to get unpacked. So, for example, a couple days ago, the French government basically said that they're going to start producing less nuclear energy. And you'd say, well, why would they do that? Well, it turns out because, the temperatures are so high, you cannot use the water to cool these nuclear reactors because the exiting water is then so hot that it would actually destroy the ecosystem of the lakes and rivers that they use to feed natural fresh water in to cool the nuclear reactor. So if you play all of that out, you start to see an issue where by, October, November of this year, we're back into the same complexity where energy is the tip of the spear around which everybody starts to debate all of the national security issues that we have to deal with, the Ukraine war, et cetera, et cetera. So I don't know. I mean, you've made a lot of money this year by basically doing the following, which is the exact opposite of everybody else. When everybody else was freaking out, had you bought, you would have made a ton of money. Now everybody's like, it's over. And you can tell that by looking at the VIX, which is the volatility index. We're about to get into the high teens. You tend to basically buy volatility, which is essentially you get short stocks. And when the VIX is in the 30s, you tend to basically sell volatility and you buy equities because we've hit the bottom. So there you have it. I really don't know what's going to happen from here, but I tend to think things still have to get a lot worse to flush everything through the system.
Well, let me just speak to this rally in the market for a second, because I think there was a really interesting chart that Philippe Lafont showed at that COTU summit that we talked about on this pod a few months ago. And I'll just put it on the screen. I put it in the chat. What it basically shows is that during protracted bear markets, you can still get substantial bear market rallies. And so during the 2000-2001 dot-com crash, you had these plus 32%, plus 41%, plus 45% rallies, but even while the market as a whole was going down.
One interpretation, Sachs, of this could be people are picking the winning stocks while the losers continue to lose, and that's what's causing this, jagged edge or the dead cat bouncing, as they say. Which is what we're seeing in a lot of these public companies, right? I don't know if you're watching, but Uber, obviously I'm still a big shareholder, had a massive print, and other companies have been doing equally as well, Apple included.
I think two things happened last week. One is there were a number of companies that reported good earnings, and I think even more importantly, had strong forecasts. So that helped. And I think it was just there was so much pessimism and negativity that just companies reporting decreases that weren't as bad as people were expecting created some room to move up. But the other thing that drove the rally is that the Fed made these comments on the heels of that 75 basis point rate increase that we were close to neutral. And so the market seemed to get really optimistic that we wouldn't get much more in the way of rate increases. Maybe there'd be a 50 basis point rate increase towards the end of the year, which would bring the Fed funds rate up to about the 2-year bond rate. So the idea was we're close to neutral, and markets really reacted to that. So at the end of the day, I think that the data here is going to be a lot more important than what the Fed says, because certainly the Fed has said a lot of things over the past couple of years that turned out not to be true.
You would agree they seem to be doing something correct here with the 75 bips, and taking it a little more seriously. It's having an impact.
I'll say it again. I've said it now 5 pods in a row. We've never seen a moment in history, in American history, where when CPI has printed successively above 5%, that it got under 5% without Fed funds getting to that same number. So we should all hope that this is the exception that proves the rule, but there's an enormous amount of data that would tell you that we have to take rates to double what the equilibrium rate is thought to be right now. There's always stuff going on in markets, and markets represent the collective sum of our wishes and expectations and also the realities. This is why I think, for me at least, the way that I process this information is not trying to have an opinion on any one of those things, because I find it too hard. If I go back to the historical artifacts, have there been issues in the past the way that, Friedberg described? Absolutely. So this is why I think you can look at the fact that whenever there's inflation and whenever it's spiked, what has had to happen by the Fed is you have to take rates above that key 5% threshold when CPI is above 5% to break enough demand so that the economy's reset. And I think that's where we are. So instead of trying to figure out whether, the Brazil thing as an example that Friedberg said is crazy. Like he's basically, he said publicly in a press release, the army's on my side and it's ready to help me, keep and stay in. Just the craziest thing. So what are you supposed to do?
The fighters need to take to the streets.
So what are you supposed to do? In my opinion, I'm like, you know what? A version of Brazil has happened before. I don't know enough history, quite honestly, to know the specifics of what happened then and how that could translate to now. And I don't want to spend the time understanding what's going to happen in Brazil right now. I'd rather just say there are 20 or 30 things that could very much complicate the world economy. I think the reality is that governments need to flush all this excess money out of the system so that we can really find out what equilibrium demand is and get back to normal.